Good evening, everybody. This is Johnny Seville from Acorn Wealth, and this is your executive summary for stock setups for the 14th of September. Now, currently looking at the futures markets, we can see that the S&P 500 is up 6.55 on the futures at the moment. As we can see, the overseas markets, the FTSE and the German DAX are actually having a slight rally. But of course, that's going to be expected. We've seen a lot of volatility in the market over the last few days. Obviously, we've seen this back and forth over the last few months just suddenly come to instant volatility, which is great. We're used to seeing that in September, which means trading action is coming back. 4.2 billion shares down on the SPX on Friday, 3.9 billion almost on Monday, 4.1 billion. So volume coming back from the basically average of around 3 that we were seeing kind of in the middle parts of August. Now, as we can see, we're getting a lot of oscillation back and forth as the market heads towards the end of open range for the first part of September. Open range resets, of course, this Friday being options expiration. So we could see this, we're basically seeing this back and forth between 21.20 and 21.60. Now, the ideal kind of close for the market is that we can see another update tomorrow and for that to top out and close right in around 21.60, basically for, like an upward shot on the candle and a close right at the bottom of it on Thursday, Friday, and then have that then break down in the first part of the week. That would set a negative bias for open range, meaning that we could fill this kind of resistance going into the end of the week and drop from there. That would be the ideal scenario I see for the shorts, but we'll see how the week turns out. Certainly at the moment we're seeing a lot of bearish action. If we have a look at the corporate high yield bonds HYG, we'll actually see here as this comes up on the screen that we've had this rising wedge which we've been pointing out for a while, and that's actually in fact broken down, and the money flow has shot right below zero. And as you can see, this certainly doesn't look like it's consolidating. This is actually leading on the way down. We can see 25 million shares traded on Friday on the way down. On the way back up, 17 million. On the way back down today, 21 million. Volume certainly has it in the downward direction. So my bias right now is switched to the downside. Now let's have a look at the stocks that we've been following here. We're just going to switch over to that list there. Okay, so there's HYG. Let's have a look at some of the existing stocks from the newsletter. We have, these are the ones, of course, we've been following recently. JASN. Now, this is on the bullish side, and obviously one of the alerts from a couple of days ago. This is probably one of the few stocks that's actually got some resilience. We're still waiting for this money flow to come up, and we're still really waiting for this to break out. I'd love to see it break through this 220 zone with some confidence, and then and then the next test will be around this 240, 243 area. That's kind of the zone it needs to break, but if it can overcome that, it should have a good shot up to 280. So this is certainly on my watch list going into the next few days. The other one, of course, which is an existing that we're looking at, ITG. Want to see this one break 16. So these are kind of on the watch list at the moment to see if they really get some power. They should get a decent short-term pop, and that's what I'd be looking for in the longs. Given the negative bias, I want to be looking to get in and out as quickly as possible. Obviously, from the ones that have already been from a few weeks ago that have been in play for quite a while, Penske Automotive Group is just so impressive. That's basically getting up to its target area. 50.73 is its target since the entry criteria back at $40. The options are up several %% now if you got into those $40 and $45 November calls we suggested back in August. So that's playing really well. And of course, in the downward drop over the last few days, this has continued to go up. So Penske looking very, very good still, but we'd obviously start looking to take some profit around this area as we are around that $50 target that we've been talking about in the newsletter. So I'd at least take a half position of profit. You'd be up about 300% on those options now. So you can take out that original capital, and then you're simply playing with house money. So nothing wrong with that. Let's have a look at let's look at TBT first. Now we actually suggested these on July 13th to take a look at the January 2018 $35 calls. Those were $2.95 at the time, and of course you've got over a year and 3 months for those to pan out. They already are. Those calls are up from $2.95 to a close of $4 today, so those are looking really, really good also. So TBT, a very long-term play on, of course, this is the ultra short on the 20-year Treasury bonds. Okay, let's have a look at QLTI. So we go from some of the big stocks to then some of the more speculative ones. We get a little bit of everything over here at Acorn. So QLTI having a great day considering the market's weakness. And this is why we look at some of these smaller price stocks, is that they're not so heavily manipulated by the market makers, not so much garbage going on. And they kind of march to the beat of their own drum a little bit better than some of the mainstream stocks. QLTI, which was a 147 entry criteria, now up to 155. Again, amazing in today's markets. The volume going from 240,000 shares on Monday to 929,000 shares. So that's looking really, really good. And of course, we expect that to continue. We're looking at a $1.76 target on QLTI. Okay, and we'll of course be continuing to watch a full breakdown of all these in the trading room on Thursday. But let's continue on. We've got, so we've had a look at those ones. I'm just going through my list. Of course, the other ones we talked about back about a month ago. We talked about the lack of volatility in the market, and we talked about the VIX options using UVXY as the vehicle. We talked about the March 2017 $25 calls. That was back on August 10th. We suggested that. Now those are now up from $7.90 to $10.25. The stock trade side of things would have stopped out, but the options for the longer term play we suggested having a look at, March $25 calls again up from $7.90 now to $10.25. So beautiful move on that. I would expect these to continue, and I would still be looking at those March $25 calls as a reasonable way to play that. Again, it allows us to control our risk because we can only invest in these what we're willing to lose. We're not loading up on these or having substantial positions like we may with the stock, where we can get a much more controlled exit percentage-wise based on the volatility. These are some of the things where we invest a little bit less, but if it pans out, can make substantially more. Of course, if you're not fully aware of the Acorn strategies and how we do money management with these things, certainly tune into one of our upcoming webinars to learn a bit more about that. But UVXY looking really good, and like this could be something that could easily get up to $40 or even $50 or higher. Again, lots of time for that to pan out as well. Okay, so there's a couple of longs for you. For those of you who are speculators on the gold plays, of course we're keeping a close eye on Randgold, and this is one that is around the support area. We've got a possible cup and handle formation forming as part of a bump and run formation, which is basically where we get this handle, kind of like a frying pan, this handle going down, and then basically towards the end of that handle, I'm looking at the screen as I do this, of course. As you look at the end of the handle, that's where the frying pan appears, that little scoop down the bottom. So when you see that, that's usually a bullish formation. It's rallied up, pulled back, and I know that one of our fundamentalists who really likes gold, he's long here as a short-term speculative play for options that expire this week on the 16th. The $100 calls Strath has bought for 60 cents. So looking at a very high risk play. So again, looking at that, if that pops to say 105, 106, looking at those to potentially go up to $3, $4, $5 from a 60-cent investment. So the risk is losing everything. The upside is maybe doubling, tripling, quadrupling the money if it works out. So again, the kind of thing where we only risk a very small amount for a potentially very high amount of reward, but it is obviously very high risk, so be warned, and that is a play on the gold for the long side. Okay, now let's switch over to the shorts. We have NCS, This one is looking great. It is holding the momentum down. This, of course, was a flag formation where we measure this flag, the distance from the top to the bottom, and that is usually how much it should then extend its run by. So we look at that breakdown. So this should hopefully now continue its way all the way down towards that 1250 area, and this is looking really good. I would adjust the stop criteria, or suggest taking a look at adjusting that down to around 1537, which just to protect that kind of entry zone where the strategy triggered that entry alert as a short. AVXL, Alpha Victor X-Ray Lima. This one, of course, has been on our watch list for quite a while. We had looked at an aggressive trade on this one for those of you who like to play the smaller stocks. I love them. I like to play all stocks. Anything that's going to make money is something that I'll take a look at. AVXL was an entry criteria that our strategy suggested at $2.87 that we sent back on August 11th. And we were waiting a long time for it to come around. It finally came around today, dropping 14.29% on 1.76 million shares over yesterday's 620,000 shares. So the target criteria was 2. I would adjust that up a little bit to look at $2.13, and that would be an ample drop of over 30%. So that's looking awesome at the moment. Johnson & Johnson, of course, which has been on our list since it was alerted back here as it crossed as the moving averages crossed. Again, if any of this looks foreign to you, just remember that this is exactly what we will be teaching you more about. And if you are just getting started, you can make sure you do attend our upcoming workshop. We've got a free training workshop coming up for those of you who are very brand new to Acorn, which is at acornwealthcorp.com/training for you to register for, so you can learn a lot more about all of these things if you are brand new. For most of you who have been with us for a while, of course, you've been following this since that alert, and Johnson & Johnson looking like it's going to continue its downward trek just as it crests into these moving averages and seems to be rolling over. So holding the momentum, which is the key thing for Johnson & Johnson. We've also got Whirlpool, WHR, and Whirlpool has been obviously a current alert looking at these back here as it dropped down from 186, and now this has just dropped and dropped and dropped, now down to 166, which is incredible. So I'm very, very impressed with Whirlpool. The water's certainly heating up in this jacuzzi, ha ha ha. And liking this a lot. Oh, I did forget to mention though, however, on Johnson & Johnson, so I did miss this note, that we'd originally talked about the stop criteria at 126. This has dropped substantially now. I would adjust the stop loss to 120 and 33 cents was kind of where I'd look at that new resistance, holding it down to protect profit if you're in that type of a trade. Okay. So let's go over to the new ones we have for tonight. Now these are all, we've got quite a lot of long alerts that we've been sending out recently. So these are the first batch of some of the shorts. I found so many very, very interesting shorts. Of course, we've been focusing on stocks that are starting to create momentum to the downside. We're also looking for stocks that have high debt to equity levels with dividends that have previously attracted a lot of people to buy in that are now starting to roll over. So we're looking for high debt to equity ratio companies where the insiders are selling them, high price to earnings ratios, basically all these things that make them susceptible to weakness and selling. Now SNX is one of them, and I'm really looking for this to let's have a quick look here and get a bit of perspective. You can see that this is a possible head and shoulder pattern, which is where we get the left shoulder, second left shoulder, and then the head. And so essentially what I want to happen here is I want this to break the bottom of that candle support. And if we do get that, so I'm looking for a break of $100.93 to the downside. this has a good opportunity of really getting all the way down to $84.13. Now, it is a higher price stock, but don't let price scare you, because, I mean, ultimately, if you buy a $10 stock and it drops to $9, you make 10%. If a $100 stock drops to $90, you make 10%. Same amount of money. Now, you might be able to only buy less shares, so with $1,000, you might only be able to buy 10 if you're trading with, looking for $1,000. If you're trading 10,000, 100, and so forth. It's not the amount of shares that make you money, it's how much it moves. So as a stock trade, I like this one with a target of $84.13. I'd look at a stop criteria of $105.53, which basically means you're risking about $4.60 for the potential of making roughly $16.50. So there's great risk reward there, where you're getting a, what is that, so about 4 to 1, where we 4 to 1. So one trade like this that succeeds pays for 4 trades like it that doesn't. And that's the trick about being a trader. It's not about making 70-80% successful. I mean, it's great when we do, but it's preparing for the fact that even if you only got it right half the time, you're still making great money. So a 4 to 1 risk reward ratio roughly on this one is quite appealing. On this one, the volume on the options isn't great, but if you were to look at the options, I'd be looking at the $105 December 2016 puts, which are about $7.20 at the moment. Okay, now the next one is SPG, or Simon's Property Group. Now, retail REITs, which is one of the which is where this resides in, have been attracting a lot of insider selling. Now, this is an upward channel, essentially, that you can see here. We measure the distance from the top to the bottom, and that is how we get our target once we've broken below that channel, which we've done today. As you can see, not oscillating back up to resistance like the market did. It broke new lows today and it's been trading several million shares of volume after only trading a couple 100,000, 800,000, a million throughout the end of August. We've gone from an upward channel, which is bearish. Again, you can see the upward channel here, which is basically a really smaller version of this much bigger one. And we've gone up, broken down, and this could be a potential short as well. Now, on SPG, I would be looking at that as a possible options play as well, looking at the $210 January puts, which are currently $12. I'd be looking at a smaller position, and I'd also be aware that this could rally back up into this area as high as 216. So we've got about a $10 risk there, to where we would look at the stop loss. I would add a stop after we see tomorrow's action, but the target would be all the way down here to 182. So we have a $24 potential reward for that $10 of risk. So we have still 2 to 1 risk reward ratio, and I would be looking at again those 210 January 2017 puts. Okay. Now let's go across to Tupperware is the third one. Now, as you can see, this is really rolling over after going through a sharp rising wedge formation throughout this period. What I like about this is that it's really kind of rolling with a sense of those moving averages sitting on top. And with Tupperware, this has a 4.68 debt to equity ratio. So their debt versus their equity is about 5 to 1. Now, of course, when we're talking about risk-reward ratios, about making sure things are in the right order, this is a little bit scary. This is saying things are not so good, and I like the looks of this one. And of course, we can have a quick look at the insider trading, and we'll just go over to TUP, and you can see we've had some insider selling here of about 9 million that came in from the chairman and CEO not too long ago. So I like that one, and I'd be looking at the $60 January puts, which are currently $2.73, and I think this has a possibility of getting all the way down to about $52. That would be what I would be looking for as a target. And in terms of a stop criteria, I'd be looking at the high of this candle, which is 65.39. So I'd be looking at 65.53. Now, of course, there's quite a few that I really like in this list. There's the first two. There's the first three. Now, if you're not much of an options player, here are two that I liked, which are more of the stock side of things. So, trying to give you, don't want to overwhelm you, just want to give you a couple of options to look at depending on what really appeals to you for different trades. SBS has as a beautiful long-term upward channel. We've had one touch. Let's just tighten that up a little bit. There we go. One touch, two touches, three touches. Here's the break after three touches. That's pretty typical, and we're kind of free falling here. Now this one could be something that really just shoots straight down. I'd be looking at an entry criteria of 843, so it has to break lower than where the low of today's candle was. And I'd be looking at a first target of $7.87 and a second target of $7.13, looking at the levels that this breaks down to. We can also use our Fibonacci retracement zone to look at how that matches up with some of our calculations. And let's just see. We probably measured that from the wrong area. There we go. So you can see that's kind of very close to this target. So 843. Let's have a look. So that's where the Fibonacci is. So I'd be looking for a break actually of 837. We want to go on the other side of that. Wait for it to break support. So entry of 837, looking at a target of 787, and then the second target of 713. Stop criteria I would be looking at is $9.03. Last but not least, TSE. Again, a rising wedge. We're breaking down into a possible bearish flag pattern, and we can see that the smart money's been divergent. Once again, I'd wait for this to continue breaking down, but what I really found interesting in this one was, again, let's have a quick look at the insider selling. Huge amounts. I mean, we've got various directors, BCIP Trust, Michael Plantovine, Stephen Zide, Stephen Thomas. I'm not going to try to pronounce the rest of these, but you can see these are all directors of the company, 10% owners, and all selling 8 million shares each, as reported from the Insider Cow. Now, this is in the synthetics industry, which we've been seeing significant selling coming from in the insider selling reports we've been looking at over the last few months. So that's very, very interesting. And I think that's something that is certainly worth a look. Now, TSE, if we look at the chart, has come all the way up from around 20 bucks. We're at 52 at the moment, so there's ample opportunity for this to really plummet. And I'd be looking on this one at the. You could look at shorting that. I'd be looking for a break below $50.93. I'd be looking at a stop criteria of 56.43. And the way that I would play that is I would be looking at the $55 February puts for an options play. Otherwise, I would be looking at it as a stock play and simply dropping the stop loss down as that hopefully continues to drop. Now, once again, if you're brand new to Acorn and this is one of the first videos you've watched of ours, you can certainly join us for one of our workshops coming up next week. It's I believe it's on Tuesday. I'll just double check that. It's the 20th. It's on Tuesday night at 5 p.m. Pacific. You can register by going to acornwealthcorp.com/training. And if you are not completely brand new to us and you are wanting to continue receiving these video alerts every night to your email just like this, then you can register for a full month to get these alerts every night. as well as live training every Tuesday, Thursday, which are also recorded if you can't attend live, which is only $9 for a full month to try us out. And you can register for that at acornwealthcorp.com/gold. So, it's going to be a very, very exciting week ahead. I hope you're all ready and geared up for it after the summer break. For now, good night. Happy trading.